Sir, where should we send the ambulance?
Send it to the frickin' moon, idiot.
Hi again everyone, I hope you're all having a great day. So this is somewhat of an overdue video on Sensionic Holdings, ticker symbol SENS or SENS. This is a video that one of my audience members has been spruiking in the comments for several weeks now, and he has been pretty spot on with the stock's rallying potential, and he has received vindication as he would have been making a killing in this time. Anyway, this is my attempt at taking a look at SENS and how I think the short squeeze is playing out. It is going to be mainly a focus more on the technical side of the stock and not so much on a discussion around the expected impending FDA approval for their continuous glucose monitor, a product which in its own right has a lot of merit and is what is really behind driving much of the company's growth at the moment. I haven't been watching the stock for that long, so I do not feel that across the history of this development, so I'm not going to focus on it too much. Anyway, let's get into it. So Sensionics has found itself climbing up the Fintel short squeeze ranking in recent times. Presently it is sitting 6th on that list with 26% of the float currently shorted. What is holding the stock back from properly squeezing is that there is still breathing room for shorts traders in the sense that they still have on average almost 6 days to cover their positions, and the borrow fee is still relatively low at 10.02%. So while the stock is climbing these rankings, it's not as high stakes a situation yet anyway. I think if the stock can continue to rally or at least maintain its current price levels until at least the end of the week, even if there is no FDA announcement in that time, that would create a greater amount of pressure on the shorts, as it will likely bring down the average days to cover significantly, which will also contribute to pushing up the borrow fee and generally creating a higher pressure environment for shorts to cover. One thing I think is quite interesting to look at is the market capitalization is currently at $1.65 billion. And if we look at this hourly chart, we can see that the stock has almost doubled so far in February. This means the company's market cap has almost doubled in that time. So for people who are invested in the stock for the long term or looking to play a short squeeze, they need to be mindful of how much the stock price and market cap has already inflated. And they have to ask the question, is the FDA approval, if it is indeed granted, going to justify the growth in market cap and share price? And putting this recent rally into perspective with other recent rallies for SENS stock, we can see that the stock has been higher before, including when broader market sentiment was far healthier than it is currently, which means that the $4, $5 and even $6 price marks are perhaps not out of the question as a reachable price in this current rally. So historically thinking, I think SENS still has some way to run, especially if the FDA approval is to indeed come out favorably. Switching back to our hourly chart, we can see that the stock has maintained strong momentum all of February, riding the top limit of the Bollinger Bands and sitting around and above oversold territory in the RSI throughout this same period. An interesting observation I think that is worth pointing out is despite the great rally, the overall volume of trade has not actually increased that significantly in this period. The stock has not exchanged over 500,000 shares in a single hour in this time. This makes me believe that at the moment there are a lot of hodlers in the stock who are not relinquishing, and it also makes me think that Sensionics has still not gained widespread attention as a short squeeze. Arguably, that could mean it is still a great early opportunity to jump into the stock if you think it will indeed go on to a strong rally. However, contrary to this would be the thought that the stock is floating up on the back of low volume, which could indicate a price correction may be soon coming. Looking at one last indicator, the MACD or Moving Average Convergence Divergence indicator, during yesterday's trade we saw the stock push to the finish at a new high. However, the MACD did not follow and hit a new high point in the correlating time. In fact, this is a trend which has occurred a few times in this rally. This is a sign of bearish divergence, aka not a very good sign. However, the stock is yet to majorly be affected by this trend, as of yet anyway. Even though the MACD is pointing to a negative turn for the stock, it's never something that is a sure thing, as has been demonstrated in the recent past. So moving on to some final thoughts. Just because Sensionics stock may have some technical indicators pointing to a reversal in its current price trends, if these reversals are to be realized, I can't see it being much more than a temporary correction. I think that as long as speculation around the FDA approval for their continuous glucose monitor remains and the increasing prospects of a short squeeze remain, we will likely continue to see a move upwards in the stock. I think that if a proper short squeeze is to happen, we need to see a few more days of sustained and or increased prices to bring down the average days to cover and subsequently boost the borrow fee for the stock. This would ultimately put a lot more pressure on shorts to start to cover, and then we start to see that short squeeze action happening. Anyway, what are your thoughts on SENS stock right now? How much higher do you see the price rising to in this current rally? What do you think will happen after a decision from the FDA is passed down? Let me know your thoughts in the comments below. Until next time everyone, may the markets trade in your favor. Cheers.